Why Tesla is worth more than traditional car companies. For more than a century, the auto industry followed a simple formula. Build cars, sell cars, compete on reliability, price, and manufacturing scale. Companies like Ford, Toyota, Volkswagen, and General Motors became industrial giants by mastering that system. Then Tesla arrived and completely changed the conversation. Today, Tesla is often valued higher than many of the world's biggest automakers combined. And that confuses a lot of people. Because when you look purely at vehicle production, Tesla doesn't dominate the market the way Toyota or Volkswagen does. Traditional automakers still sell far more vehicles globally. So why do investors treat Tesla differently? The answer is simple. Wall Street does not see Tesla as just a car company. Many investors believe Tesla is actually a technology company, an artificial intelligence company, an energy company, and potentially even a robotics company, all wrapped into one. And that belief is what created one of the most valuable companies in modern history. To understand why Tesla became so valuable, we first need to understand how car companies are usually valued. Traditional automakers typically operate with relatively low profit margins. Building cars is expensive. Factories cost billions. Supply chains are complicated. Competition is intense. And consumers are highly price sensitive. Most automakers make money by selling large volumes of vehicles while carefully controlling manufacturing costs. It's a difficult business. And because growth in the automotive industry is usually slow and predictable, investors tend to value car companies conservatively. But Tesla changed investor expectations completely. Instead of presenting itself as a normal automaker, Tesla positioned itself as the future of transportation. And that difference matters enormously. When investors look at Tesla, they aren't only asking how many cars the company sells today. They're asking what Tesla could become 10 years from now. That future-focused narrative is one of the biggest reasons Tesla's valuation exploded. Tesla didn't just sell electric vehicles. It made electric vehicles exciting. Before Tesla, electric cars were often seen as slow, unattractive, and impractical. Tesla transformed EVs into high-performance technology products. The company combined sleek design, powerful acceleration, massive touchscreens, software updates, and futuristic branding into something that felt closer to an iPhone than a traditional automobile. And that software comparison is extremely important. Because software companies are usually valued much higher than manufacturing companies. Why? Because software scales incredibly efficiently. Once software is developed, it can often be distributed to millions of users at very low additional cost. That means software businesses can generate enormous profit margins. Tesla recognized this early. Unlike traditional automakers, Tesla designed its vehicles around software architecture. Tesla cars receive over-the-air updates just like smartphones. Features can improve after purchase. Performance can increase remotely. New capabilities can be added digitally. That approach completely changed how people viewed cars. Tesla vehicles became platforms. And platforms are often worth far more than products. Then there's autonomous driving. This may be the single biggest factor behind Tesla's massive valuation. Many investors believe Tesla could eventually solve self-driving technology at scale. If that happens, the implications are enormous. Imagine a world where Tesla vehicles operate as autonomous robotaxis. Instead of people owning cars that sit parked most of the day, vehicles could continuously transport passengers automatically. That could create a completely new transportation economy. And investors see trillions of dollars in potential value there. Whether Tesla actually achieves full autonomy remains highly debated. But valuation in financial markets is often driven by expectations of the future, not current reality. And Tesla's future narrative is powerful. Tesla also possesses something incredibly valuable for artificial intelligence development: data. Every Tesla on the road collects driving information. Cameras, sensors, navigation behavior, road conditions, and driver interactions all generate massive amounts of real-world data. That data helps train Tesla's AI systems. In the race toward autonomous driving, many believe data is one of the most important competitive advantages. And Tesla has billions of miles of driving information from real customers operating in real conditions around the world. Traditional automakers simply don't have data ecosystems on the same scale. This is one reason Tesla is often compared more to technology companies than car manufacturers. Investors aren't just evaluating factories and vehicle sales. They're evaluating artificial intelligence potential. And in today's market, AI commands enormous investor attention. But Tesla's valuation story goes even deeper. The company also changed manufacturing itself. Tesla aggressively pursued vertical integration. Instead of relying heavily on third-party suppliers, Tesla aimed to control more of the production process internally. The company builds batteries, develops software, designs chips, and operates giant manufacturing facilities called gigafactories. This strategy gives Tesla greater control over costs, production speed, and innovation. It also allows the company to move faster than many traditional automakers burdened by decades of legacy systems. Tesla's manufacturing process is designed more like a technology company optimizing systems than a traditional automaker following old industrial models. And investors love efficiency, especially scalable efficiency. Tesla also benefited from exceptionally strong profit margins during key growth periods. For years, many traditional automakers struggled to generate strong margins on electric vehicles. Tesla, however, managed to build premium-priced EVs while scaling production globally. That combination impressed Wall Street, because high margins combined with rapid growth can justify extremely high valuations. Then there's the energy business. A lot of people forget Tesla isn't only selling vehicles. The company also develops battery storage systems, solar technology, and energy infrastructure. Products like Powerwall and Megapack position Tesla within the global transition toward renewable energy. And that market could become enormous over the coming decades. Governments around the world are investing heavily in sustainable energy infrastructure. Power grids increasingly require large-scale battery storage solutions. Tesla wants to become a major player in that future. Again, investors are not just valuing Tesla based on what exists today. They're pricing in future opportunities. Then came robotics. Tesla introduced Optimus, its humanoid robot project. At first, many people dismissed it. But some investors saw something much bigger. If Tesla successfully develops advanced humanoid robots powered by AI, the potential market could be enormous. Factories, warehouses, logistics, healthcare, retail, and even household labor could eventually involve robotics. Now, whether Tesla can realistically dominate that industry remains uncertain. But uncertainty doesn't stop speculation. And speculation can dramatically influence valuations, especially when investors believe a company has visionary leadership. Which brings us to Elon Musk. Love him or hate him, Elon Musk is one of the most influential business figures in the world. And his presence has had a massive impact on Tesla's valuation. Musk doesn't present Tesla as a normal company. He presents it as a mission, a movement toward the future. His ability to capture public imagination is extraordinary. He talks about colonizing Mars, artificial intelligence, autonomous transportation, robotics, renewable energy, and the future of civilization itself. That level of ambition attracts enormous attention from investors and the media. Tesla became more than a stock. It became a story. And stories can become incredibly valuable in financial markets, especially when millions of people believe they're investing in the future. Tesla also built one of the strongest brands in the automotive world. The company spends relatively little on traditional advertising compared to competitors. Yet Tesla dominates online discussion, news coverage, and consumer attention. The brand became associated with innovation, status, and technological progress. That kind of cultural influence is difficult to measure financially, but it matters. Because strong brands create customer loyalty. And customer loyalty supports long-term growth. Tesla also benefited from timing. The company rose during an era of low interest rates and massive enthusiasm for technology investments. Investors were aggressively searching for high-growth companies capable of dominating future industries. Tesla fit perfectly into that environment. At the same time, traditional automakers were often viewed as slow-moving legacy companies struggling to adapt to the electric future. Tesla appeared faster, more innovative, and more ambitious. And investors rewarded that perception. But not everyone agrees with Tesla's valuation. Critics argue the company became massively overvalued. They point out that traditional automakers still sell significantly more vehicles worldwide. They argue Tesla faces increasing competition from companies like BYD, Ford, Volkswagen, Mercedes-Benz, Hyundai, and many others entering the EV market aggressively. Some analysts believe Tesla's valuation depends too heavily on future promises that may never fully materialize. Autonomous driving remains technically difficult. Robotaxis face regulatory challenges. Humanoid robotics is still in early development. And electric vehicle competition continues intensifying every year. Tesla has also experienced major stock volatility. The company's share price has risen and fallen dramatically multiple times. That volatility reflects uncertainty about Tesla's future, because ultimately, Tesla's valuation is based less on what the company currently is, and more on what investors hope it could become. That's the key idea. Tesla is valued like a future technology platform rather than a traditional manufacturer. And whether that valuation proves justified will depend on what happens next. Can Tesla truly solve autonomy? Can it scale robotics? Can it dominate energy storage? Can it maintain manufacturing leadership while competition grows? Those questions will determine whether Tesla becomes one of the most important companies of the century, or one of the biggest market overvaluations in history. But regardless of where the company goes from here, Tesla already transformed the automotive industry forever. It forced nearly every major automaker to accelerate electric vehicle development. It changed consumer expectations around software and connectivity. It pushed the industry toward AI-driven transportation. And it proved that a car company could become one of the most talked about technology businesses on Earth. Tesla's valuation may seem irrational if viewed through the lens of traditional automotive economics. But investors aren't valuing Tesla as a normal car company. They're valuing a vision of the future. A future powered by artificial intelligence, automation, software, robotics, renewable energy, and autonomous transportation. Whether that future becomes reality remains uncertain. But for now, that belief is what makes Tesla worth more than traditional car companies.